Good evening, folks. Douglas McKeown here, Authorised Financial Advisor. I'm delighted to be able to welcome tonight our special guest to share his experiences on US residential property investment. Young man Chayot Ing-Aram from America, who was resident in New Zealand and shifted to America to develop a portfolio over there and also a business and helping people invest. Chayot, welcome. Would you like to give us a bit of background to yourself and how you ended up in Los Angeles?
Sure. Thank you, Douglas, for having me tonight. I'm very glad to be here to share my experience in the U.S. Housing market. So, I got started in the property investing when I was in studying in university in Massey, and during the daytime I would go to class and study, and at night I would come and paint at one of the properties that my friend and I bought. We were doing up a number of houses together, so it was like that for a number of months. So we just go to class in the daytime and just come back at night and just start painting and do all this stuff. So it was very interesting, and I always love real estate. Property investing is, I think, one of the best investments you can make. And I've been fortunate to have been successfully invested in America. So I'll be happy to share my 2 cents with everyone tonight.
Excellent, excellent. And whilst he was painting houses, he's managed to get 2 degrees, one with honours. So congratulations.
Thank you.
Well done. Okay. Just a bit of housekeeping. You'll see on your screen there with the control box that you are able to type in any questions. So if you'd like to do that, feel free, and we'll endeavour to answer at the end. If we don't get a chance, I will contact you. Just also a disclaimer here that this is not personal financial advice and is intended only to be a guide. And in the event you wish further advice in this area, then we need to go through the proper procedure for me to be able to give you that advice. So let's start. We're talking about an opportunity here for New Zealand investors, and it's really about leveraging your existing wealth and equity in New Zealand to provide regular income for an exceptionally reasonable outlay initially. So it's all about buying a property in the USA for a low purchase price. And just as an example, your average price in America, a 3 to 4 bedroom house, $60,000 to $70,000 US. The average comparative here, you're talking 300 to 500. And so if you do the maths on that, one house in New Zealand means you could buy 4 or 6 in America. So the difference is quite massive. The expected yield over there is between 9 to 12%, and the average rent you're going to get is between 800 and 1,000 US. Average operating costs round about 35%. So that includes all your fixed outgoings, but excludes interest. So even if you're borrowing here to buy with that current exchange rate, then it's fairly likely that you're going to be cash positive. So why on earth would you buy a property 12,000 odd miles away? It's time saving and passive, just like any passive investment here, if that's what you've got. It's cash flow positive, so that's good. That means you get income. And if you have a negatively geared property here, it may at worst neutralise it, and at best give you additional income. It's going to give you a high return on your investment, 10% plus, as we've talked about. There are a large excess of making homes in America, which has the effect of expanding the rental market. So if you were unlucky enough to lose your home, it just means that you still have to live somewhere, so you are then going to be looking for a rental property. Currency is favourable, stable economy and low taxation in the US. It's easy to manage because you've got a fully managed, hands-off property manager looking after it. There's a very strong rental culture over in America, and for the world for that matter. It just means the affordability of property is not high, particularly in America. Although they may be able to afford it, they can't borrow the money because of credit issues. The legal system over there is beneficial to landlords and investors, and one of the best yields in the world. So Chayot's going to talk about later about the window for cash flow. It's one of the cheapest in the world in our developed nations, and Chayot will also talk about this window that we're talking about and the recovery of the US housing market. And if you do establish credit points over there, then you can fix your interest rate for 30 years. Can you believe that? Wouldn't that be lovely in New Zealand? And the current rate is, both in US and here for that matter, is the lowest it's been for many, many years. So I'll just introduce Chayot now, and he can tell you when is a good time to buy American investment real estate.
Thank you, Douglas. I guess the answer to that question would be yesterday. Like I said, it's always a great time to buy property yesterday. But if you looked at the situation that we have today carefully, you would see that we have already reached the bottom last year, and we have already seen prices starting to rise in many different markets across the country in America. So it's fairly evident that it's a great time to be buying today if you can. And before I jumped into investing in the U.S. housing market, I've done quite a lot of research into the U.S. housing market, and I came across this really interesting cycle. It's called the Great 18-Year Real Estate Cycle, and based on its 200 years of history, it shows that on average the length of time between one peak of the market to the next peak of the next market is usually around 18 years. The only time in history in the last 200 years that this wasn't the case was in the period between 1925 to 1973. And we all know what happened during that time. It was what we call the Great Depression. And because of that Great Depression, the housing market in the U.S. did not recover for a very long time. And that's the reason why the length of time between the peak of the market during the Great Depression was a lot longer than the usual. But what we saw is that right after that cycle, the next real estate cycle in America, it only lasted 6 years. It was a lot shorter than the previous market cycle, and that's because when you have a very long real estate cycle, then you tend to have a very short cycle the next one around as well. And what we've seen is that even the latest cycle that we have seen, when the property price peaked in 2006, that was actually 17 years apart from the last peak in the housing market in 1989. So based on these factual findings, we would conclude that we would expect that the next property peak in America would be around the year 2024, which means that we have around 11 years from today until the next peak in the market. A lot of people, ask me the question once they have heard me talk about, the real estate cycle, the 18-year cycle. They will ask me that, does that mean that we still have, many years before we can get started investing in the market? The answer is yes and no. Yes, if you only want to invest for capital gain, then you would obviously have, many years, maybe even 4, 5, or 6 years from today to keep buying properties and to see that capital gain of your properties. But if you want to invest for both cash flow and capital gain, then you really have to buy fairly soon. And I would say that the window would be between the next 12 or up to 18 months from today. And that's because we have already seen prices, starting to go up quite a lot from last year, which means that the yield has already been coming down quite a lot. So if you want to maximize your cash flow from US properties, then you would really have to buy between now and the next 12 to 18 months. There are a number of places that you could buy houses in America for cheap and get a very good return on your money. So we have identified a number of places, and we are showing you 5 of the different states that are very good for cash flow. The first one is Michigan. As Douglas, you have already invested in Detroit, Michigan, right?
Yes, I have.
So you have a good cash flow in your property?
Yeah, my strategy is basically more cash flow as opposed to capital gain, but there's a big rental market in Detroit, and the market is just starting to lift there, so the capital gain is going to be there, I think, over a period of time.
Yes. I personally invest in Memphis, Tennessee. I have a number of properties in Memphis, and I have experienced the very same thing that Douglas just mentioned. I've received a very good cash flow on my properties, and I've seen properties prices have started to come up quite significantly in my portfolio as well. And the things that you mentioned about the fact that there's a tendency for Americans to become tenants rather than own their own houses. That is a very good point. And in fact, these places that we mentioned, these states, they actually have a lot higher ratio of tenants to homeowners compared to many different places. So, for example, I know the stats in Memphis, Tennessee. So in Tennessee, you would have around 66%, so 2/3 of the population as the tenants, and only 1/3 as the homeowners, which is quite a big ratio of tenants compared to massive. Because I guess in New Zealand, on average, I believe that the ratio of tenants to homeowners is around 1 to 1/3, right? So 1/3 of the populations are usually tenants, whereas 2/3 are homeowners. Is that about right?
No, it's higher than that now.
Oh, okay.
Yeah, the rental population is growing quite quickly.
Okay, so I guess that's like a worldwide trend, and that we have more and more people who want to rent rather than own their own houses. Okay. So anyway, so we also have Florida, Texas, and Georgia as some of the places that we identify as the places to be for cash flow investing. And these are some of the statistics that we looked at when we identify the right market for cash flow investing. So the first thing we looked at is the job growth rate. Obviously, the higher the job growth rate is, the better for investors. because the tenants, can pay a higher rent, and there will be demand for more housing as well. We also want to invest in places that has a fairly low unemployment rate, so that we want to make sure that the tenants can actually pay rent, and that we would have a supply of quality tenants. The next thing we looked at is the population growth. Population growth, the higher the better, because it means that there will be more demand for housing, and that will eventually result in higher capital growth and better rental growth as well. And the last thing that we usually looked at is the home affordability index. Generally, the higher the affordability means the better the cash flow, and the lower the affordability means the better for capital growth investing in the long run. And you can actually find out about these statistics yourself by just going to these websites that we are showing to you right now. And I believe that Douglas, you will be giving the audience a copy of this webinar, is that right?
Yes, I'll send it with the PowerPoint and the audio.
Okay, so that's great. So in that case, you'll be able to just go onto this website and find out more about these different statistics for yourself, just to be able to see if the markets that you are thinking about investing is actually a good place to be buying in. Okay, so the next thing is I want to talk to you about how you can invest in American real estate today. So the very first thing that I would want to talk about is the entity of your property portfolio, right? So in America, I would suggest that you open what is called the LLC, which stands for Limited Liability Company. You don't have to do it. You can always own the property in your own name, but I would usually advise my clients to get an LLC, because it gives you that asset protection, and it also gives you some tax benefits as well. And the next thing that I would recommend you do is to open up bank accounts in the U.S. Again, you do not have to actually open any bank account in the U.S. You can elect for the property managers to wire your rental income to your New Zealand bank account if you wish. But for the purpose of building your U.S. credit score, so that eventually maybe in 2 years time you would be able to get a mortgage in the U.S. and fix your interest rate for 30 years, like Douglas just mentioned. So if you wish to do that, you would have to open bank accounts in the U.S. and start building your credit history. Okay, so the next thing is that you can always purchase these properties in America using your own cash, or you could always get fundings. We have access to what we call the private lendings, or what is known as hard money lending in the U.S. If you are more of the conservative, investor, then it's probably better for you to pay cash for these properties. After all, they are pretty cheap anyway. But if you are more of the aggressive investor and you want to see more leverage, then you are more than welcome to take on the private lending loans.
Bit like a finance company here, so unless you're, as Chayot said, pretty aggressive, probably something you'd stay away from.
Yes, so it's really up to you as an individual investor. You can choose to be more conservative or aggressive. You can also choose to be more passive or active as well. If you are like myself, more of the passive type, then it is recommended that you work with a reliable turnkey providers. And what does that mean is that the word turnkey provider is that these are the people who would go out there and buy the properties from the banks. So they would go and negotiate with the bank managers, and they would get the property under contract, buy it outright, and then they would actually go and renovate or rehab the properties inside and out. and they would even in fact the tenants for you. So it's all turnkey, which means that it's all being done every step of the way. So you don't have to actually do anything. So you can be very passive about it. But if you're more of the active investor, then obviously you could actually spend the time and resources and set up your own team in the US, find your own agents and find your own property managers and things like that if you are more of the active investors. But in any cases, the management of the property is always the key to your success in US property investing, because it's very important to have the right property managers looking after your hard-earned assets, because it's very hard to try to manage properties by yourself, as opposed being a across the world from your properties. So
you don't want phone calls during the middle of the night from
America. No, you don't want to pick up those phone calls about blocked toilets or whatever. No.
That's not part of the deal.
Okay, so like I said, the management of the properties are the keys to your success in US property investing. So what we do is that we go out there and actually research and do a very thorough due diligence to find the right and the reliable property managers to help manage properties for you. And with the properties that we have to offer, you will get cash flow from day one, meaning that the day that you buy it, we would have already have tenants in place for you. Okay, so you would start collecting rent from day one. We also like to work with property managers who are also investors themselves, because they would understand the needs of the property investors. They would understand a lot more of how to treat property investing as your business. Okay, and also we only work with property managers who have at least 10 years of experience working as a property manager. Also, the property management that that we work with, they all have the online portal for the owner. So the owner can just log on to the website and they can pull up information about the property. They will see the monthly rental statement. They will see all the invoices. They will see all the things that all the maintenance bills and things like that. So it's very transparent and it's very convenient for the owners to have access to those information, because it's live online.
So what in your experience, Chayot, would be, obviously different over there than New Zealand. So what would be the major differences in management style or any problems that might arise there as opposed to here?
Sure. Okay. I mean, first of all, I need to distinguish, different markets in the U.S. because it's a very big country. So the places that we like to work, the markets that we like to invest in, they are very pro landlords, but they have laws that is very favorable to the landlords. So it's a lot easier for the property managers to evict the bad tenants and things like that, and to recoup any losses from damages and things like that. So that's the places that we like to work in those markets. The big difference that I would say is that because the laws are very favorable to the landlords, you tend to have a very better quality tenants in general, because the tenants will understand that if they do something wrong, they would be treated accordingly. So they tend to have more responsibilities, and as a result, in general, the property managers in the US, they would only do the inspection around 2 to 3 times a year, as opposed to every 3 months or so, as they do in New Zealand. But like I said, because the tenants, they understand that they have the responsibilities to look after the properties, and if they do something wrong, they're going to be held responsible for the actions.
Right.
Mm-hmm.
Do you want to give us your thoughts on Section 8 tenants?
Okay, yeah. So there's this thing called the Section 8 tenants, which is similar to what do you call it here in New Zealand, class? Is it
family support, maybe?
The housing New Zealand or something like that? Or?
It's yeah.
Oh,
similar to that.
Yeah. Okay. So basically, Section 8 is the program that is created by the federal government in the U.S. and it is created to help the low-income families, to be able to afford a quality housing. So what the government will do is that they will actually pay the rent on behalf of the tenants directly to the landlord's bank account. So if your tenants, if they are qualified as the Section 8 tenants, then you would actually get paid directly from the U.S. government every month.
And that can be a portion of the rent. And the other good thing with Section 8 tenants is that the government have a range of criteria, minimum criteria on property that before they'll accept paying or subsidising rent for a tenant. Is that right?
That's true, yes. So what that means is that if your properties, if let's say you buy a property that has a Section 8 tenants in place, that would means that your property is actually, has a very good quality, that it actually passes the very strict test set by the U.S. government.
Yeah, no, that's good.
Okay, and from my own experience, the property managers that we worked with, they do a very good job with tenant screening and rent collection. But the things that I like the most about our managers is that they have in their portfolio, they actually have a very, very low vacancy rate, and that comes because they understand that it's the vacancy that actually kills the cash flow. So what they do is they tend to set the rent just slightly below the market rent. Okay, so maybe they might set the rent at $5 to $10 lower than the market rate, which doesn't mean a lot to us, the investors, but it actually means a lot to the tenants, because the economy is pretty bad and every single dollar is actually count. So because we set the rent just slightly below the market rate, we are able to minimize our vacancy rate. Every time our property becomes vacant, we'll be able to quickly find new tenants who wants to move into our properties, because our properties are have been renovated to a very good standard, so they are very attractive to the tenants. Plus the rent is just slightly lower too. So we always have that lower vacancy rate compared to the other property managers who might not understand this aspect of the property investing game.
That's good.
And so I would like to show you a real life case study. This is one of the properties that I have personally bought. Okay, so this property is located in Memphis, Tennessee, and this is the picture of the front of the house, and this is the picture of the back of the house. It has a very big section. So my wife and I, we purchased this property back in September last year. So that was only 5 6 months ago, and the rent that we collected back then was $939 a month, as it was rented out to a Section 8 tenant. we paid 9% management fee. So what we get every month is $855 a month, before paying things like the rates or the insurance. And we carry out the appraisal, which is the valuation, last month, just a few weeks ago actually. And we were able to, get the valuation at $90,000. So that means that we have effectively created an instant equity just by buying well below the market value. Okay, so we were able to create almost 30% in instant equity.
Yeah, most of these properties are renovated, or as they say over there, rehabbed. So did you spend anything on rehab here, or was it rehab, or you just bought it?
No, I mean,
it was fine.
Yes, I mean, like I said, I'm a very passive investor, so I just wanted to buy the house that has already been done.
Yeah.
Okay, right. So this house has already been done.
Yeah.
Everything is nicely done. So I paid close to $70,000 for it, and that was it. So let's look at the figures. Okay, let's crunch the numbers. So the cash flow forecast of this year, we expect to get close to $6,000 in cash flow after paying for the property taxes, or what you call rates here, paying the management fee, after paying even for the insurance and the maintenance. We would get around close to 6,000 in cash flow this year. But the current tenants that we have in place, we actually signed them up on a 2 years lease with an increase in rent starting from next year. No. So starting from next year, we would actually bump up our return. So instead of getting just around 8 to 9% return this year, we will actually get up to 10% next year. So that's quite a nice thing. I mean, we sign up the tenants for 2 years, so we wouldn't have any vacancy next year. So it's always a nice thing to know.
It's good.
Mm-hmm.
Okay. Well, we've been fairly general and haven't got into too much detail, excuse me, about particular properties or particular markets for that matter. So we just wanted to give you a general overview tonight and just encourage you and show you that buying property in the US really isn't a lot different than buying it here, except it's about 5 times cheaper, which has got to be good. And ultimately, if it's well managed, the involvement on a regular basis from yourselves is pretty minimal. So with that, we'll leave it there. There hasn't been any questions, so if there is some questions, just type them in now and we'll quickly answer them. Otherwise, we'll call it a night shortly, and we'll get back to you with a copy of the slides. At least I think we only got half the webinar recorded, but never mind, that's not a big problem. We forgot that one, Chayot. But so if there's no questions, we'll just close up in a couple of secs and I'll be in touch with you. And once again, really appreciate you spending some time here with us tonight, Chayot. And happy investing and safe trip home.
Thank you. It's my pleasure to be here. Thanks for having me too.
Okay.